I'm going to go over technical analysis and more specifically trade entries. The main point of this presentation is really and truly how you can use any form of technical analysis, whether it's indicators, price action, EMAs, whatever it may be, as long as you know the higher time frame fundamental trends, right? I'm going to also talk about something new that you guys may not have heard of, and it's called anticipating and validating trade ideas before taking them. And finally, I will take you over to the charts and show you how I apply the things taught here in my own trades. Taking profitable, effective trade entries is the hardest aspect of trading for retail traders, and I'm sure many of you can agree with me on this. This is because most retail traders do not have a plan, they do not have a structure, a trading system, or some form of pre-planned analysis in play. And failure to have these things in play usually means that traders either enter trades too early, too late, with FOMO, with fear, with poor risk management, with regret, and a myriad of other negative emotions or negative ways to enter a trade. And this is because many of you guys have been introduced to the financial markets through social media marketing, right? Through social media marketers, the typical quote-unquote gurus flexing in front of rented Lamborghinis and fake Rolex watches. This type of introduction to the financial markets is very toxic. It promotes a more of a gambling mentality. And once you get sucked into this, it's very, very difficult to get out, because you end up having an addictive personality to the point where you don't even know that you're gambling, that you've become a gambling addict. So instead of focusing on the core building blocks of what makes a trader a good trader, the majority of retail traders get introduced to the financial markets in this toxic way, where they don't understand the trading instrument itself, they don't understand the impacting factors that moves said trading instrument, they don't have the knowledge of what, why and how and when they are trading. And this lack of knowledge causes them to only chase money, which of course has a high rate of failure, as we all know. And this is even more true with trade entries. When it comes to trade entries more specifically, even the experienced traders still fail at this, because there is a lack of planning, there is a lack of consistency, there is a lack of structure that is necessary to allow for long-term profitability. And the only reason they are still in the trading game even after years or sometimes decades of losing is, eventually they might take a few lucky trades that puts their dopamine receptors into overdrive, and they're back into the markets with the same mentality, with the same process, the same gambling mentality, and nothing has changed. So this structure and this pre-planned analysis is really, really important, because again, the markets are all speculation, right? And you will have some losing days or losing streaks, which is completely normal in the realm of statistics. You cannot have every day as a winner. You will run into losing days and losing streaks, and having this pre-planned analysis structure, trading system, a form of plan essentially, will help you get through these losing days and losing streaks with full confidence, knowing that it's completely normal. So trade entries involves pretty much all concepts in trading, from psychology, risk management, fundamentals and technicals, such as price action to market structure. I will try to go through each factor in much detail throughout this presentation. But essentially, the online trading world is full of toxic gamblers that show off a few lucky wins without showing any kind of structure, pre-planned analysis or consistency. And getting sucked into this is really hard to get out of, because gambling is addictive in nature, of course. Luckily for you, you can break out of this trap, because I'm going to show you the right way, which has worked for me personally, and I'm sure will work for you as well. Now, effective anticipation. This is the secret sauce, right? For me personally, instead of saying, oh, I took a trade entry, I'm taking trade entries, I use a term, I productively anticipated the trade, which means that you're anticipating your trades ahead of time. In other words, before you take them, in a productive fashion, where you analyze the markets fundamentally, technically, psychologically, and from a risk management perspective before you hit buy or sell. So you do all the work before you hit the buy or sell button. What majority of people do, they do all the work at the same time when they're hitting buy or sell, and that's why 90% of retail traders lose. So basically with this, you will know the fundamental bias, you will know the market structure, you will know the areas of interest, you will know the key price points, and you will know the risk you're willing to take. With all this productive planning in place, all you have to do is patiently wait. You have to just patiently wait and anticipate for the trade to come to you. You're not gonna go chasing after the trade, because that, obviously we know that doesn't work. And in my opinion, this is a million times easier and more profitable than just chasing trades or forcing trade entries, where people convincingly lie to themselves, thinking, oh, I know that what I'm doing. Because if you're taking trades on a whim without the proper research back it, you don't really know what you're doing. So for productive anticipation to play out, you need 3 things. The first one is a trading system. Now, this is essentially a written in stone set of rules you need to follow to do the overall market analysis, which is then used to spot trading opportunities. For me personally, the trading system I use is the fundamental analysis that I do and teach you guys in this service. So in my trading system, the fundamental analysis gives me an either buy or sell bias on the higher time frame, and I simply write out that bias by taking trades on the lower time frame or the intraday time frame. But this trading system can be literally anything in the world. It can be your EMAs, it can be your Fibonacci, as long as you have the other points in place as well. Again, having a trading system with rules set in stone is very, very important, because without this, you're never going to be able to effectively speculate the financial markets, and you'll end up constantly losing money. Now, of course, you can still lose money in the financial markets even with a trading system, but trust me, you will be making a lot more money than losing, or at the very least, you won't be losing as much. Hence why it's called profits. In business, profits, the term profit is essentially revenue minus expenses. The same thing here. The profit is all the winning trades minus the losing trades. Moving on, we have risk management. Now, this is very, very important. You need to have your risk predetermined, and you need to understand your risk to reward ratio on a trade prior to executing. This has many, many benefits. One of them is that there's less emotional attachment and better control of capital. Right, risk management is basically your control of capital. Your first goal as a trader isn't to make profits, it's to safeguard your capital. Right, after you've overcome that hurdle, then you can think about making profits and multiplying your capital. Unfortunately, that's where 90% of traders fail at. Right, so just simply, before you drink a bottle of water, you're not going to drink first and then open the cap, right? You're going to open the cap and then you could drink. So it's the same kind of thing here. With risk management in place, you will start thinking in terms of probabilities before executing the trade. Your train of thought in your mind should be, okay, so I'm risking $10 to potentially make $30 with a predetermined stop loss and a predetermined take profit. And even if this trade loses, I'll be okay, because with a 60 to 70% win rate, I will be profitable over multiple trades. Now, that's the train of thought of a productively anticipated trade entry. This approach removes that emotional attachment, and you become a lot more logical in your thinking before taking that potential entry. Now, of course, if you come with no trade system and no clue of risk management, of course your heart's going to be racing on each pip movement. Of course you will suffer from insomnia because you're too anxious about the fact that half your salary is on the line on a single trade, alright? Of course, every single upside will have you being extremely greedy and optimistic, where every single pullback will have you thinking that it's the end of the world. Now, these things impact your psychology and mental health negatively because you're trading on emotion. You don't want to do that, when in reality, all you need to do is be static in your approach, right? Keep in mind, the market is ever changing. All you have to do is adapt to the changing marketing conditions and keeping your trade entries static no matter what. The good thing about fundamentals is of course that you will know the market changes based on changing fundamentals before price action or even market structure displays it on the chart. Which means with fundamentals in play, with knowledge of fundamentals, you can get better risk to reward as you enter the new trend or the trend changes earlier. So far, your trading system has to be static and your risk management needs to be static. Now, the final thing is pre-planned analysis. With the two above in place, we can take a look at the final piece of what makes a productively anticipated trade entry, which is pre-planned analysis. With the two above in place, you need to have trade ideas you're looking to execute on a pre-planned basis. So essentially, instead of coming to the charts and scanning multiple pairs for trading entries or trade ideas, what you need to be doing is having a trade entry or trade idea ready with the confirmation from your trading state system, with the confirmation from your risk management system, and then you can take the trade, all right? I usually have my trades ready a full 2 to 3 days in advance, as me personally, I'm a swing trader. But if you're an intraday trader, you can have them 24 hours in advance, or even a few hours if you're a scalper. The point is that you never trade live. You do all the work hours before price hits your buy or sell zone, at which point all you have to do is hit the buy or sell button. That's all you need to do. Do the work beforehand, and once price comes to your area, you just need to press a button, right? This is a lot easier than doing everything live and then falling prey to bad emotions or bad risk management or poor psychology, because that's what everyone does, and hence 90% of traders lose. So overall, productive anticipation is the way you take entries. And to do this, you need a trading system, a risk management system, and pre-planned trade ideas. So there are some prerequisites to productive anticipation. Keep in mind, the goal of productive anticipation is essentially to give you confidence in your trading and trading entries. So the first thing you need to productively anticipate is having that knowledge and understanding of the financial markets. You need to be knowledgeable in the trading instrument. You need to know your trading style inside and out. And as I have said before, the market is all speculation, and to effectively speculate, you need to be knowledgeable, and then you will be able to find trading opportunities. It's like driving a car. If you don't know what each function of a car does and how it prevents you from crashing, you won't be able to drive, and ultimately you'll end up crashing. So you can't have this mindset of trading on a whim. You can't be looking for buys 1 minute and a few hours later you start looking for sells. Trading based on what looks quote unquote good at the time is essentially driving a car without knowing how to shift gears, right? Secondly, you need experience in the markets. Now, you can build experience through either live trading or backtesting the hell out of your trading system. You basically have to go through some form of trial and error phase to figure out what works for you. Because keep in mind that the markets are all repetition in technicals and fundamentals. And again, having a trading system and sticking to it will help you develop this experience whilst cutting out the day-to-day noise. Unfortunately, too many retail traders depend on another person for analysis. You'll see tens of thousands of traders joining YouTube live streams or following signal chats on Telegram, just so they don't have to go through the efforts or mental strain of doing the work themselves, because they're lazy. You need this accountability and responsibility to build up the experience for yourselves within the markets. Obviously, with me, I do provide trade ideas and analysis based on fundamentals. However, I don't want everyone to follow this blindly. I'd rather have you understand what I'm doing and then choosing for yourselves if you agree or disagree with my analysis. So I want you guys to make success completely dependent on you, not another person, not even me. Right? That's the best way, because at the end of the day, you will become self-sufficient. So keep that in mind. You need to hold yourself accountable, and you need personal responsibility. That experience is on you to build, not anyone else. And finally, you need planning and risk management. Again, without proper risk management and planning, you cannot stay emotionally neutral. 90% of traders lose due to a lack of emotional control. This is where structured plans and rules come into play to help you focus on the probabilities of trading and not the emotional driven money side of things. So far, this is what the process looks like. You need a knowledge, you need a trading system, and then which helps you build up your experience, which leads into trade ideas, which allows you to anticipate and which allows you to execute. Right? Now, knowledge, you need to know what you're doing. The more you know, the more money you'll make. In fundamentals, the knowledge is knowing the 8 factors that impact price, right? Knowing which factor holds the most weight through technical analysis, and then following the central banking sentiment day in and day out. Obviously, if you're trading indicators, you should know the indicator from ground up and know how to build one. And if you're trading AI, you should be an expert in AI and how it goes hand in hand with the financial markets. So you need knowledge of the financial markets and the tool that you're going to use to trade it. Afterwards, you're going to need a trading system. This is the blueprint with rules and guidelines on how to attack the markets. So what you trade, why you trade, how you trade, and when you trade it, right? Now, the knowledge combined with a trading system allows you to develop your experience. The more experience you have gained through charting, through the market hours, from a foundation of a strong knowledge base and set in stone trading system, the more profitable you'll be over time. With some experience, you can start developing trade ideas on a pre-planned basis. At this point, you have a fighting chance of speculating the markets effectively. So far, you have the knowledge, you have the trading system that is built on that knowledge, and then you test that out in the markets with experience. As long as you're not messing up on points 1 and 2, as long as you're not messing up on knowledge and trading system, your experience will be a good experience where you make some money along the way, and then you can start pumping out trade ideas like clockwork and simply play the probabilities in your favor, at which point you just hit buy or sell. Now, at this point, all you have to do is simply anticipate and patiently wait for price to come to you, not you having to chase it around. Because if there is a gap in your knowledge or trading system, at least when you wait for price to come to you, you'll be able to tell whether this system is profitable or not, without losing too much of your money. And obviously you can trade demo, but I would advise for you to trade live, even if it's a small account, so you get used to controlling your emotions and you get familiar with this process. Now, finally, you execute based on the patience and anticipation. What a lot of traders do is they simply ignore steps 1 to 5 and they go straight to the execution phase. Now, they think that, oh, price made a double top, does that mean sell? Oh, look, we have 3 white soldiers as a candlestick pattern, does that mean buy? This is absurd, right? Because this way of trading implies that the market is too basic. It's really not, and we all know that. You know, the market is very complex, and you need all the steps from 1 to 5 ingrained in your mind to effectively trade the financial markets. And obviously step 6 is simply hitting the buy or sell button. And then at the end of step 6, you go back to develop your experience and chart and market hours even further. So when you go through the entire process from step 4 to step 6 again, you develop that second nature focus, second nature autonomy, where most decisions are automated. Right. Again, same with the driving analogy. You don't think that you need to stop or hit the brake pedal once you see the person in front of you stopping, or once the light turns red. Your foot just automatically goes for the brake pedal, right? You don't manually think that you need to do that. Now, keep in mind, this 1 to 6 step process can literally be applied to any strategy in the world.